For the past 7 months, I've been trading options on SCHD and sharing my journey with you. It's been a rewarding experience, but things have changed since the 3-for-1 share split in October. The options have become increasingly difficult to trade, and after running the numbers, I've decided it's time to pivot. In this video, I'll explain why I'm stepping away from trading SCHD options, and I'll share what I'm looking for in my next Dividend Aristocrat or Dividend ETF to trade. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals, showing you how to use options to boost your portfolio. I started trading options on SCHD on July 23, 2024, when the share price was $80.59, and it was great for a while. There was a 3-for-1 stock split in October, which didn't change anything with my share count or dividend yield, but did make it much harder to trade the options moving forward. There just wasn't as much activity, the spreads were too far apart, and the options got difficult. So I've decided to move away from trading options on SCHD, and my decision today is whether to keep the shares that I have and let them keep earning dividends for me, or sell them and move them into a different dividend position. During this time, I've gone from 150 shares to 330 shares. I started off with my initial investment of $12,085 for 150 shares. And then over all this time, I've sold options, added shares using the options premium. And at one point, I sold 300 shares and started some new cash secured puts, but I've made dividend income, and when I add it all up, my total expense and income at this point is $8,470. I have 330 shares for an average investment per share of $25.66, and the current share price is $28. And today I have a $30 covered call expiring that will expire out of the money. So looking back at this, I did a summation of all of my income and expense and the current net liquidating value of the position. I have a profit of $769 on this on these SCHD trades. And right now, if I keep these shares, I'll get $1.06 per share in annual dividends on 330 shares. And when I calculated what that would mean for me, the premium on these not premium, but the dividend income on these shares would be about $349.80 a year, and that is likely to increase, which translates to an annualized rate of return of 4.13%, which is not bad, especially because the share price is also appreciating. So my question was, do I take my capital gains, or do I just leave this position here doing the dividend reinvestment and move on to something else? And my inclination is to leave this $9,240 worth of stock in the account, earning dividends for me and reinvesting and growing my share count, because this is a strong dividend ETF. The thing I like about it is that I lowered my cost basis to $25.66 a share. Right now it's at $28. So this has been a good sequence of trades, and I'm going to just leave this in the account to do its thing. If you have suggestions for a great Dividend Aristocrat or ETF for my next trading series, drop them in the comments. I'd love to hear your ideas. Don't forget to like and subscribe so you can join me in exploring the next chapter of this trading journey. See you next time.